'Cause if you don't know me by now, we better get back in here. We better get back in on some of this because what I was looking at, if we're looking at the board here, again, it's Monday, April 10th, 2023, 11:05 a.m. on the Swatch Watch, Central Standard Time. We've got the SPY call credit spread on the board, looking for a 6-cent credit at the 410/412. At this point, it's not going to fill unless the market turns because it was actually, I know it sounds like it's not true, but it was just about the right time to make that trade. I missed that trade. See, if we look on the left there, you see the black number of 407.69. It would have 407.74, right in that range. That would have filled at the 410/412 on the call credit spread. It would have filled at a 6-cent credit. 5 contracts would have been $30 on $1,000 in collateral. And then it would have basically been looked the perfect trade right now because the market's now turning red on the SPY, turning downtown to Chinatown all the way down to 406.35. That doesn't mean it's not going to bounce back up. But at the moment, that trade would be a perfect trade. But I think at this moment, we've missed it because time is working against us and obviously the share price. And then you see my money has turned against me. If we go up to here at 9:10 a.m., I was up $3,371 for the day. And now I'm down $1,670 because of those market fluctuations. So I was looking, though, to take some risk off the table and maybe put some dollar bills in my pocket. I was looking at this Deere put we put on last week. I think it was the 5th, April 5th. Let's take a look. So it's a Deere and Company $365 put, and they're currently at 375.87, up 1.68%. But you see, that's the option. So if that's going up, that means it's going to cost me more to get out of the trade. So if we look over here between the bid and the ask, it's at $1.41 to 174. So that's a wide bid and ask. And what I was hoping when I was looking at this earlier was I'd be able to get out for $150. That doesn't look like it would be the case now, but we can still look to possibly close this trade at a nice profit. So if we look at the date sold, so it was on April 5th. So what would that be? Was that Wednesday? Yeah, that's last Wednesday. We put this trade on and we collected $420 for doing so, for taking on that risk. And we put up $36,500 in collateral because it's a 365 put times 100 because every options contract represents 100 shares. So today is the 10th, so it'd be a 5-day trade. We might still be able to do that for 150. That's just about in the middle. So say we got out at 150. All right. In fact, let's just try to get out at 150 right now. So we would be buying this position closed, right? Buy to close. If we did $1.50, it would cost us $150 at this moment to get out of the trade. But in doing so, let's see what happens. Drum roll, please. Currently, nothing. I was actually holding my breath. So we might have to spend just a little bit more to get out of it if we indeed want to get out of it right now. But if we did math on those, if that gets filled at 150, we could do math, and I think it ends up being a pretty good number. So $420 is what we collected on Wednesday, minus 150 that we're trying to pay to close it today. That'd be a profit of $270. And then we put 36,500 representing this one contract, 100 shares at 365 strike price. So our collateral was 360 or $36,500. So we would divide it by that. Okay. Then we divide that result by the number of days. So it's 5 days, right? And then we have this equation, and then we annualize it by multiplying it by 365. Then we end up with a 54% return on collateral. But that is fantasy math, right? Yeah, it's fantasy math based on if we're able to continue to make those exact type of trades, putting them on, collecting $420, taking them off for $150 in only 5 days. Yep, fantasy math. I like it. So currently we're not able to fill that. So is the market continuing to go down or is it sideways? Okay, it's attempted to bounce up just a little. This is on the SPY, currently at 406.61. It got all the way down to 406.33 just a few minutes ago. Let's go directly to Deere and Company just to see what they're doing minute by minute to find out if we're going to have a chance of buying that contract closed at $150. There is ticker symbol DE, Deere and Company, currently at 375.82, up over $6 today. So that's why we have any attempt to make a nice little tidy profit on that short-term 5-day trade. Let's go to the chart, pull it up and see what's up. 376.10 at the moment, and it's trying to go a little bit green, which could help us. I'd love to just pull that risk off the table and move on, right, to the next trade. So we could leave it on if we want, assuming or having our fingers crossed that the market continues to go up on John Deere. Like as this goes up in price, our probability of filling that 150 buy to close order, our probability goes up because the distance between this number and that strike price of 365 then becomes, less and less risk of that asset, the John Deere one option contract, 100 shares, the risk of it dropping down to $365 bills between now and Friday, which is just a few days away because this expires on 4/14. That's this Friday. The probability of that happening goes down and down. So that means the risk goes down and down. So I could leave it on and just let it ride all week, but I'd love to just lock in the dollar bills. Profit, take the $36,500 in collateral off of the trade back into the settlement account, and then the settlement account collects 4.4% interest while I wait to make my next trade. So what would we have to do to fill it now? See, the biggest problem we have is that it's a big spread between the bid and ask. So that means that there's not a great deal of interest on that trade right now. So in the meantime, let's see if there's anything else that's possible to pull off the board. We got these $78 Blackstone puts. Blackstone is currently at 82 or so? 81.15. So it's turned on us. So if we go to the asset, I know it was at $82, over $82 earlier today. So that's working against us currently on that $78 puts. Okay, so if we look, let's go to 1 day. 1 day. So it was up all the way to 82.55, 82.49, and now it's plummeting, and it's currently at 81.12. So that is not in our favor. That is working against us. So that means it would be expensive to get out of that trade, and it's showing us at positive $50, but only 13.33% into the profit of the full profit of that trade. So got that going for us. Again, I don't know if you're hearing the humming that just started on my computer again. Wonder if it's this newfangled microphone I'm attempting. Hopefully the sound is improving. I promised you I would improve the sound. Working on doing that. So right now we've got reds all across the board. S&P, Dow, and NASDAQ all down while the Russell is hanging on for dear life, up 0.21%. And crude oil was up earlier this morning. You see a little bit of green there, and now it's down to $80.30. Filled my tank up today. I was over at Casey's. You probably don't have a Casey's by you. Casey's is, I think, a regional thing. And I paid $378.9 per gallon. And then I'm like, you know what? Let's do an experiment, sweetie. Let's drive by Walmart, which is right by Casey's. And it was 9 cents less per gallon. So, hey, might be my new go-to spot for the gasoline. Gasolina will be the Walmart. So we'll, I know you're excited to know where I'm going to get my gas. So we'll keep you posted. 375.77. Let's see, 375.77. What would we have to do to get out of this trade? Okay, we're ticking back up, so that's in our favor. Computer really getting loud now. Hopefully it's not coming through on the microphone. Microfono. Let's replace the order just to see if there's any way to close it at this momento, in this una momento. Your order was canceled. Please resubmit. Nope, we're not going to do that. But what if we go to 155? $1.55 to close that thing out. That's possible, right? Release that collateral of 36,500. There it goes. Okay, so we're off the table. That's $155. So we had collected 420, right? $420. We just paid 155 to buy it back. That's the wrong equation. 420 minus 155 equals 265. So that's our net profit. And it was on the $36,500 collateral, right? So we made almost 1% in 5 days. That doesn't sound like a lot, but if you're able to repeat this trade over and over, and if we divide that by the 5 days, and then we annualize it by multiplying by 365, so we only dropped 1% because we were at a 54% annualized return on the original buy to close at $1.50. We closed it at $1.55, keeping all the rest of the money at profit and annualizing that particular return with our fantasy math at 53%. So that's what we have. John Deere off the board. Buying power will increase. Wonder Twin Powers activate. Buying power will go up. And then we'll also have, it won't show today because this number usually takes a day, but if you were watching this right before your very eyes, you saw that buying power go up. And then this number here, cash earning interest, that won't go up until probably tomorrow. That usually lags by a day. So there we have that. I'll check back soon and continue our day together. So thank you so much for tuning in, and I'll see you in the next video.